Aloha and welcome to Java. It's Thursday, July 18th, 2024. Thank you kindly for joining me, and also all of you that are in Discord now. I just want to thank you all, not just for the discussions that we have once a week. I think that we had another great one yesterday, but also throughout the week, the content that's going there. Feel free to join in that. There is a link in the description. Completely free. So with this, we've got a lot that I would like to bring up today. Some important things. Starting with the markets, we've got the risk indicator right around 270 in the green territory, but pulled back a bit yesterday. We had some drops in particular in the semiconductors and tech sector. So a lot of this led by NVIDIA took a hit. SPY also took a hit. We've got the small caps are looking forward to, as I was saying before, pricing in the new presidency. So small local businesses look to benefit from this. And the IWM, as we call it, or the Russell, basically represents small businesses. And those rallied. So very strong in that sector, but is that enough? So we had some tech pain yesterday, pulling back, and we want to see if this is a correction, which we needed some correction, pulling back a little bit and gaining strength, or are we watching the beginning of a complete trend change? So we are looking this morning, we had earnings from TSMC, Taiwan Semiconductor, and we'll talk about them more in just a moment. However, they took a hit. They are looking at basically they exceeded earnings, but with the environment going on, their stock's still dropping. So that says quite a bit. With that, I do expect that the stocks will basically recover and should look a bit more toward the green today, although it's becoming more stock specific, less broad every market day, it seems like. So we've got the 10-year yield we're watching had a spike yesterday. Very interesting things going on in the debt market. So I think a big part of that is not just looking toward rate cuts, but also along with some of these currency wars going on in the background are with debt swaps, namely the yen. I'm going to call them out. So we've got a weak dollar at the moment that has allowed stock market to run. Did gain some strength yesterday. Cryptocurrencies, in light of all of this, Bitcoin's still strong and looking to kind of retest here the 62,000 level. And from there, this is not financial advice, just my opinion, but from there, could have an interesting run. So with this, we've got this story, don't bank on a big drop in interest rates this year. Economic data leaving analysts expecting just 2 more ECB rate cuts in this year. Now, I had that picture of Lagarde on the front for a reason, because we are looking towards the European Central Bank, whether they are going to cut. Now, they have to stay in lockstep with the other central banks. Right now, we've got the Fed is major one for the United States. They Fed presidents coming out and managing the markets this way. So the data that came out is that 5 of 12 districts reporting flat or declining economic activity. This is according with the Beige Book. So what they're doing basically is setting up. We don't need to know all of these charts that they've got about the Fed rate cuts and when they're going to do it. All you have to do is listen. Why do I say this? They cannot shock the markets. They cannot shock the markets, and they cannot move away from the other central banks significantly, namely the ECB and Bank of England. It would crush their currency or their economy depending on the choice that they made. So if you listen to this very closely, actually, it sounds like the United States is pricing in rate cut not any too soon, not before September. They have not set up the markets for this rate cuts, kind of easing in, but it would create too much of a market shock. And they've got to watch this direction. And if you listen to Powell, that's what he's been saying. So with the markets, we've got the stocks right now still in recovery mode, still red. Pre-market, watch what they do. This is how they ended. Now we've got an increase in the volatility index or fear index, and we've got futures going green. So gold increasing. It broke out yesterday. Silver is still relatively weak, but we're watching for that to follow. Okay, we've got our calendar coming up with jobless claims. So the employment market really is the larger numbers that they're watching now. We're also going to have a few other reports coming out, and Fed speakers now. These Fed speakers are going to basically tell us what's going on. We've got Waller saying we're getting closer to cutting rates, not there yet, and former Fed official Kaplan seeing rate cut likely in September. Now, I agree with this. Probably one, probably nominal, just to show that they're going to do this rate cut, or that they're invested in how they want to manage these markets, so to speak. So earnings today. Taiwan Semiconductor, they did a report much earlier. As I said, they beat earnings, but stock still took a hit because of the environment going on. Now we're looking at Netflix is a huge one. Also DR Horton for homes. They're a home builder. We're getting a few more basically banks. American Express on credit. Travelers for insurance is going to be a large one also. So big earnings season coming in, and we'll see how these affect. Now I'm talking about these because they're prior to market open. With banks, we've got Citizens Financial looking to build up their reserves to shield against office losses. So if things are improving so well, why are they still preparing? And it's because this commercial real estate problem is not finished. So they're still losing credit losses on general office loans. And say they admit right here, they continue to be a problem area for banks. We've got US Bank getting a boost from lower expenses, keeping a lid on the credit issue. So, and I think this is a lesson for those privately, the banks that are going to make it, cutting losses, trimming down, cutting debt, and bolstering their positions, whether it's in cash reserves or other basically assets, namely gold. They're all stacking gold. So with this, we've got Russia outlining their new digital currency policy. They've got the ruble, digital ruble, saying it's been a success. They've been testing it for some time. They have new payment systems set up to basically circumvent SWIFT when they were cut out earlier by the current administration, along with the sanctions. They learned a new way around it. They are now also working with uh, basically more of Eurasia. They are working with what is called the SCO. Now, this is Shanghai Cooperation Organization. They're ramping up settlements in national currencies and will also take this. This organization includes India, Iran, China, Russia, Pakistan, Uzbekistan, and now Belarus. So all of this trading is going to circumvent the basically the SWIFT system. So one more thing I would like to bring in. This is Saudi. Financial experts' contrarian view is lower oil prices and a weakening US dollar under the shift that they're looking forward to. I agree with this. We're looking at lower dependency, lower oil prices, and weaker dollar. You could basically substitute the word inflation. There's going to be more inflation. So we've got Saudi Arabia's Riyadh may become crypto's sleeping giant. They are really bolstering basically not just jobs, industry, cryptocurrency, crypto friendly businesses. It is all moving to that sector in that city. So they could really be an up and comer there. Now, I want to bring this up because we were speaking a bit about this in the Discord yesterday. All of these wars are resource wars. They're all bankers' wars, and nothing is what you think it is. So, first off, would like to continue speaking about the cryptocurrencies. That Bitcoin sale netted German government $2.8 billion. Now keep in mind, they did not purchase the Bitcoin they sold, they confiscated it. So they basically stole, absorbed, whatever word you want to use, $2.8 billion and just put it towards their debt, which they needed to. We've got Exxon clash with Chevron, hinging on a change of control over the Guyana asset. So that was in the news not long ago about larger, basically conflict in the area, and the United States sailed in to their rescue. Now, all of these resources backed by the military and the currencies. So this is what this is all about. They have oil. The United States now is having trouble with trade partners with oil, sanctioning Russia, shooting themselves in the foot, basically. We've got a secondary part to this. Now we've got Serbia. They've got lithium deals. They're looking at making those deals with Mercedes, Stellantis, and the Volkswagen. So all of this shift happening towards these. So we've got Taiwan Semiconductor now making more than half its revenue from high performance computing. And this is what basically led a lot of that decline yesterday, is because drop in demand and then also the basically the shift between trade. So with this, what do I always watch? Global shipping, because this is going to increase the inflation. Watching high weather issues as everything is pushed around to avoid these conflicts that are still happening in the Middle East. So with this going more into this war sector, and my apologies, it's a bit dark, but that is what is driving a lot of the economy right now, and the markets have to watch this. So all of that money that was spent towards the pier that was supposed to go to aid officially dead. They finally removed it, and all of that money basically just went onto the debt balance sheet and is going to create inflation. So this army ammunition plant, their product keeps showing up in mass incidences, and lawmakers want answers. Why am I bringing this up? You always have to follow normally the money. Well, in this case, very careless. I think they should have spent a little bit more and gone private and purchased on open market. That way it would be less easy to trace what is backing or who is backing all of this. Is agency backed, and that is why they are using standard issue in a lot of these things. So just a thought process with this. We've got Russian official Medvedev declaring the end of Ukraine if NATO joins. Well, saying basically if they do, because now NATO has placed multiple long range targeting weaponry all around, and they know that if Ukraine joins, then they will be basically bound by the agreements to protect them. So they have to eliminate this threat prior to that happening. And this is part of what has been foreseen and why they are denying allowance in. So, because it puts threats on both sides. With this, we had both of them swap some prisoners of war, and we had the United Arab Emirates. So, the UAE says they're maintaining friendly relations between both Moscow and Kiev. That really is the point I want to bring up with this, because who are your trade partners? What is going to come out of this? Where are the resources coming from in the larger picture of trade and the goods that you get and how much you are going to be spending is all going to be dictated by how these are handled and who the alliances are coming forward. So, with this, I've got a couple of other very interesting things to think about tied in with this ammunition and the source of it. We've got this other story, and I'm going to leave this up. I generally remain apolitical, but I wanted to think about this. $1 billion asset manager purchasing over 12 million shares, puts options on as many as 12 million shares. That is basically a play that it's going to go down one day prior to what happened. So we'll just think about that. Leave blanks to fill in. And the last thing I want to bring up is the first country to approve artificial meat for pets. So animal feed is the natural starting point for the lab-grown meat market in the UK. Who's the first? Britain. So if you didn't see this coming, the factories are going to shift over and become ready for human food, human consumption. So with this, I wish you all a wonderful day in trading. Thank you all kindly for being here, and until I see you again, stay free.